January 8th, 2025. Today was an expanding triangle day. We get a lot of trading range days, obviously, in trading. And this is one of the more unique types of trading range days where you have an expanding triangle. And expanding triangles have to be, in general, 5 points. They're usually 5 or 7 points, and they could be 9. By points, I mean touches. So 1, 2, 3, 4, 5, 6. So 3 up top, 3 on the bottom. This one's currently 6. Maybe it gets 7. I have no idea, but usually they're between 5. Sorry, usually they're between 5 and 7 points. Uh, Pretty standard for an expanding triangle. We've had a lot of reversals up over the past couple of days, and today we started off basically at near the low of the prior day's range. Bar one, a bear bar, but with a large tail on the bottom. There's probably buyers below willing to scale in lower, and if we start to rally, I would imagine there's going to be sellers somewhere up top. So really not that great. Bar two, a bear bar closing near its low. It's a breakout bar, but a lot of overlap with one, and it's a nested second leg trap. We went down on one, and then we went up on one, and then we went down on two. So that's 2 legs, one pullback, two. So do you want to sell below two? Probably not. Are we probably going to go below this low since this is a tight micro channel and it's going to get a second leg? Yeah, I also think we will go below the bar 74 low. So I think we'll get back to this low. 3, buyers below 2. We might go a little bit more sideways here. You can see we get buyers below 2 and a large tail on the top of 3. Not really worth looking to buy. Probably sellers if we do rally, and probably buyers if we go lower. So nothing much to do. Bar 4, a bull bar, closing somewhat near its high, but it's really not a great buy. None of this is, there's so much overlap and it's a tight trading range. None of this is going to be in the top 20% of the price action this week. That's the way that I like to think about it, at least, is, there's 400 bars in the week, and you want to be looking to trade the best, 100 of them, right? Or maybe 50 to 75, right? Whatever it is, your trading strategy, based on whatever it is you're doing. But you're looking to trade the best 20 to 30% of the bars within your setup. You're not looking to trade the vast majority of the day. And this is not something that is, you just have to ask yourself, this tight trading range, is this something that's the top 20 to 30% of bars this week for me? Probably not. So it's really not worth trading. Outside down bar on 5, buyers below. You can see we have consecutive or outside bar. So not really all that great. Probably traders buying down here more so than selling, but it's not really that great to do either. It's just a tight trading range. 6, a reversal, but a large tail. 3 and 6 are both reversals up, but with large tails. This is a couple legs down, but no one wants to buy above the bar with the huge tail on it. 7, consecutive bull bars. 1 second. 7 is a close above the moving average, but let's see if we can get a couple closes above the moving average. We probably need at least 2 or 3 if we're going to rally at all. 8, a bull bar, or a bear bar, an inside bar, but probably sellers above, scaling and higher. And you can see if you bought the close of 7, 8 is disappointing. You probably wanted consecutive bull bars closing above the moving average, considering the fact that we haven't really had that over the past day or two. You were hoping that we were going to get, 1, 2, 3, 4 bull bars, maybe something along those lines. 1 second. Okay. You're hoping we were going to get like 4 bull bars, something along those lines, and we didn't end up getting it. So a lot of traders exit and we get an outside down bar. 9. Do you sell the close of 9? I probably would not. It's a wedge. 1, 5, and 9. You might look at 9 and think, oh my gosh, I want to sell it. It's going so much lower. But this really isn't that great. Look where you're selling if you're selling below 9. This has been a bear channel for a couple of days. You could argue, it really goes all the way back over here, but the slope's a little different here than it is here. But if you really wanted to, I think you could draw, I'm not sure why it's being so slow right now, but if you really wanted to, I think you could draw a line, something along the lines of this. And, there's an overshoot or two in here for sure, but we've been basically, trying to pull back to this line back and forth for a couple of days now. So selling the close of 9 is really not all that great. There's all sorts of patterns in here. I mean, we have this big bear channel and then a trend line break here. So we're breaking the channel line and a lower low major trend reversal. If you look at a 15-minute chart, look at this, right? 20, 30, or, this bar, and this bar, these 3 bear bars. Looks good, right? Well, yeah, except for the fact that you're selling the bottom of a bear channel. So if you're selling the close of R34, you're basically betting a breakout below the bear channel is going to be successful. What are the odds of a successful breakout below a bear channel? Not really all that high. So if it's going to be a breakout below a bear channel, you're going to get more bear bars. You're going to get stronger bear bars. You're going to get a major looking breakout. and then you get a bull bar closing on its high here. That probably should not happen if this is going to be a major breakout for the bears. 10, a bull bar, a large tail on the top, probably sellers above, and you can see buyers below during 11. An outside up bar 11, but a big tail on the top. It just looks like trading range behavior and kind of in the middle of the trading range, so not worth doing anything. 12, initially sellers above 11. We're probably not going much lower if we do go lower. 13, an inside bar. You buy above 13? I don't know. I don't think it's really great to buy above 13. If you do buy above 13, it's really hard to hold because 14 has such a massive tail. You were hoping for a really good follow through bar in your swing trade if you bought above 13, except you got a really large tail, so it's not that good on 14. Closing in its lower third on 14, you usually want to see the market close in above its midpoint or in its upper third for a good follow through bar. So if you're taking a delicate swing trade, a good rule of thumb is if the bar closes in the upper third of the bar, or basically 70%, the internal bar strength, you could argue, but if it closes higher than 70% close to the high, you guys know what I'm trying to say, but a little bit more than the upper third of the bar, then it's a good follow through bar. If it closes in the lower third, get out. And if the middle third, you kind of have to make a decision dependent on context. But for good follow through, you want closes in the upper third, and you're not getting it on 14. 15, a low one short, but there's going to be buyers below. This is going to get a second leg, and there were buyers below 16, a bull bar closing near its high, but not a great buy. 17, follow through, but it could be 3 legs up. 11, 14, 17, and a big tail on the top. 18, an inside bar. So it's a high one buy, but high ones usually lead to deeper corrections and then follow through. So initially there were sellers above 17, but traders are going to buy the low of 17, the low of 18 during 19. Not really much to sell below 19. It's 3 pushes up, but the channel up is really tight from 11 to 19. So not really worth shorting. And if you do sell, how do you feel about 20? 20 is pretty disappointing. So what are those traders doing? They're looking for a way to get out. Also, 19 did not close below the moving average. So again, really not that great. 20, a bull bar, disappointing. Some traders exit above 20 for a loss, but doesn't really make sense if your stop is right here. Other traders see 21. They know it's a bad double top, 19 and 21, but they figure they'll be able to buy back their shorts. So around the bar 19 low, one tick below where it triggered them, they buy back their shorts, and that causes a bull bar on 20. It's a doji bar. However, it's a second reversal up for the bulls. So you can buy above 20, expecting a second leg up. 22, expecting a second leg up. 23, a follow through bar, a large tail. It's a couple legs up. It could be a trading range, but still a decently tight channel. Buyers below 23 during 24. 25, a bull bar, but a large tail. Again, probably sellers somewhere above, scaling it higher. And then 26, consecutive bull bars. I thought it was okay to buy up here, taking a chance that we get a sharp rally, but you have to be quick to get out. 27, another bull bar. So if you buy above 26, what's your calibrated expectation for follow through? Well, you probably want a bar closing in its upper third, and you don't really get it on 27. It does close in its upper third, but a big tail, so it's not a perfect follow through bar. 28, an inside bar, a low one short, or you'd argue, I suppose, a low 3, but it looks like a new breakout to 27 to me, so I would say it's a low 1. Probably buyers below, scaling and lower, but it could be the top of a trading range. 29, consecutive bear bars, but probably buyers below, and then a reversal up 30. If we're going to get a bull trend, 30 is going to need to work. The bears need one more bar. And that one more bar was 31, so you can sell below 31. Why? Because, the reason you can sell below it is because if you are somebody who bought, so let's say you bought for any reason, and then you saw this bar, how did that bar make you feel? Not good. It made you feel like you were trapped because you were trapped. And so those you should find those spots where you're feeling, this is about to go against me. And those should be the spots where you're looking to enter. So for me, I bought above 26, taking a chance that we were going to get a couple more legs up. And then I exited and shorted below 31. So I lost a little bit here, but then I didn't exit. I exited on the close of 36 because it was 3 legs down to the bottom of that bear channel. So that was why I got out. And obviously I made it back and then some. I did pretty well today. I sold the close of 52. And I scalped out the 45 or the 42 high. It's the same reason I sold the close of 52. You could buy above 47. I thought it was okay to buy above 47. I did buy above 47, and I wanted 48 to close in its upper third or well into its upper third even. And we got a bar closing near its midpoint, so I exited, and that caused part of me exiting. Bulls like me exiting is part of what caused 49. 50, a bull bar, but not able to close on its high. Not quite good enough to buy. Disappointing. If I had bought for any reason, I'd be starting to get become disappointed. And then I get a bear bar closing near its low 52. Again, I bought here and I exited here. So I wasn't in, but I kept myself in the mentality of if I was in, where do I need to exit? And I decided 52 would be where I needed to exit. So I shorted it and I figured it's a trading range. So a scalp is better. And I just sold it to close the gap with the 44 low and the 42 high. So right here, I exited. I had a bad day yesterday. I basically just made a bad mistake, and I bought. So my 4 bar micro channel system I bought here, taking a chance this wasn't a tight enough channel. It probably was a tight enough channel that I shouldn't have bought against it, but I did. I was basically break even the whole day, and then I bought against it, and I just walked away. So I took a good loss on that, but I made a lot more today than I lost yesterday. But either way, I should have probably not done that. But anyways, 32 consecutive bear bars, but a tail. My calibrated expectation selling below 31 was that 32 closed below its midpoint, and it did. Once I got 32, it was enough to make me think we were going lower, but I wanted one more follow through bar, so I needed 33 to close in its lower third. Had 33 closed on its midpoint or in its upper third, that's trading range price action. I want strong bear bars closing near their lows. So for me, if 33 closes in its upper third, I'm probably exiting on the close of 33. 34, a doji bar. Not really great. I think just wait for another bar. And then 35 and 36, third leg down at the bottom of, a bear channel. So probably buyer somewhere down here. Not to mention the fact that it's an expanding triangle. You still can be short down here if you want to, but you have to get out above 39. And I was anticipating 39, which is why I exited. But it's totally okay to hold. Sometimes you'll get good follow through. So 37, big tail on the top and the bottom. Not really a great bar to buy above. A bad low one short 38, probably buyers below, and we get outside up 39. Do you buy above 39? You probably can, expecting a couple of legs sideways to up, but it's really not super ideal with the tight channel down. But it's definitely okay to buy above 39. And it's probably a good trade. I just thought the channel down was really tight, and I was hoping we were going to go more sideways first. 40, a bear bar, probably more of a buy the close bar than a sell the close bar because 39 is going to need a second leg. 41, a bull bar, a large tail, and then follow through 42. It's a tight channel up, and this happens in trading ranges. Gaps close. We might get back to the bar 30 low. The bulls who bought below 30 and are scaling in are doing a reasonable thing, but if you're scaling in, if you're buying the top of the trading range, you need to be willing to scale in all the way through the bottom of the trading range. So those traders are scaling in at the new low and are using this bounce. 44, a doji bar, not great. 45, 46 consecutive bull bars. Like I said, surprise 43, so going to get a second leg. I thought 47 was okay, but you have to understand that you're taking a chance that we get a bull breakout to a new high of the day. So you can buy above 47. But if 48 is disappointing, and I thought it was, I would just get out, and that's what's causing 49. And I mentioned you could sell below 52 and use the move down to the 42 high to buy back shorts. 54, or where bears buy back shorts and you can sell, but you're long. 54, a bull bar, probably sellers above. But 3 bear bars down, so probably at least a second leg down, but not really that great. 56 should get a second leg. Some traders buy the close of 57, stop below 57. Because the bulls who bought below 56, a lot of them might be willing to exit below 57. So buy the close 57 and bull bar 58. 58 is exactly what you wanted to see if you had bought above 56. So I bought above 58, taking a chance that we start a really good rally. But I wanted a bull bar closing near its high, and we were 3.5 minutes into this bar, and it was still basically near its or near my entry price. So I just exited at the market. 59, 60, and again, not really that great. At 60 didn't make me want to re-enter. There's too many tails, too much overlap. I need good bull bars closing on their highs, and I wasn't getting them, so I just stayed out. And then we got a bear bar 61. So all I really did there was buy 68 or 58, and then exit on the close of 58. Sorry, bought the close of 58, exited during 59 for break even. And then we just basically 3 legs down from 61, 62, 63. Those good 3 bars should get another couple legs, and we did. And I would just be flat for the rest of the day past that. I don't really think there's much else worth doing. For stop orders today, 22, 26, maybe buy the close 27. You can sell below 31. That's probably the best trade of the day. 33, maybe 35. 36 is dangerous. Get out above a bull bar. You can buy on the way up, maybe the close of 43. You can buy above 39. Not really great to buy the close of 43, but okay. You can buy above 47. You can sell below 52 and then 58. but not a lot of awesome. I mean, there's enough good stop orders today that it was an okay day, but nothing super, super crazy. So I think that we're in a final flag, bear channel, possible final flag. Looks like we're in a big trading range. I mean, we have been in a big trading range ever since we got this sell off. It just started the trading range more or less. So it's a large trading range, it's a couple hundred points, but we've been within that trading range. On the daily chart, bear close, but not really that great. If you sold below here, I'd be disappointed in this. So bears might buy back shorts. We might get one more leg up. Really just looks like we're going to form a triangle here. The weekly chart, doji bar, nothing all that great. And then the monthly chart, well, it's a newer month. So, you can see though, same principles apply. The laws of price action always apply. The traders who bought above the November bar were disappointed in the December bar and used the 2025 bar January to sell out of their longs, and that caused it to be a doji. All right, that's going to be it for this video. I've been making shorter videos lately, but it's probably going to continue that way. I'm trying to focus on studying a little bit differently, and get this to where I want to be. But I would say that if you lost today, I really wouldn't worry about it. I used to get crushed on days like these. It takes a lot of time to really learn how to trade these properly. So I never worry about it if you lose if you're starting out. The success rate in this business is extremely low, and so it's going to take a lot of years of working to try and understand this stuff. So don't worry about it if you get crushed. The best thing you can do is just learn from it, and especially on expanding triangle days, I know those have given me a lot of trouble in the past. So, all right, that's going to be it for the day.